last month and we showed you this technique for how to trade it, it resulted in a 34% move on Bitcoin, and it also can help you on Forex, gold, or the stock market. Let me show you again how it works. Let's jump on in. Okay, so right now we are on a 30-minute time frame, and this is 8 a.m. So the very next candle is going to be 8:30 a.m. Eastern, and that's when the CPI report is released. And when this report releases, you don't need to do anything for that first 30 minutes. You're just going to let this candle play out. So let's let it print. And now that candle is closed. So what we're going to do is we're going to mark the high of this candle, the low of this candle, and then we're going to use a Fibonacci retracement tool. And then you're going to go from the top of this candle to the bottom of this candle, and then you're going to mark the 50% mark. If your settings are different, I'll double click this, and this is what your settings should look like, and you can go ahead and screenshot this, but you're going to want to turn on the 50% mark. If you go down here, you can click where it says levels, and it will display that it's the 50% mark, and this is super, super crucial. So now that that's happened, I'm going to put everything on the chart, and it looks just like that. And what we're going to do now is we are going to let the next candle play out, still on a 30-minute time frame. So there's that candle. The very next candle, New York's going to open. So what I'm going to do now is I'm going to switch to a 5-minute time frame. So now I'm on a 5-minute time frame. Right here, when New York opens, we are at the 50% mark. And the 50% mark, like I told you, is the crucial point. So if we close when New York opens on the very next candle at 9:30 a.m. Eastern, if that candle closes below this 50% mark, then I'm going to look to open a short position and ride it down to the bottom of this candle, because right now this is naked, untouched, untested, and we want to go touch it with price. If we close this next 5-minute candle or a 5-minute candle at any point in time above the 50% mark, then I'm going to look to long, put my stop a little bit below, and I'm going to look to ride it up to the top part of the CPI. Now here's what's super important. The reason why we're on a 5-minute time frame and why we are aggressively looking to play a bounce off of the 50% mark is because the goal is, when we catch these, is one of them is going to break. And this is how markets really perceive CPI. That price will come, it closes here, it goes down, but then maybe it gets bought back up. Now it closes above this, now it comes here, tests this, and then finally it breaks up. And now you catch this huge potential move. So that's the whole point. You wait for a 5-minute close above here. So now, and let's let the very first candle of New York on a 5-minute play out. So there's our New York 5-minute candle, and that's where it just closed. So what I'm going to do now is I'm going to open a short position on this next candle. I'm going to set my stop like above one of these recent highs. If I set it right at the 50% mark, that could just get tested and then knock me out of my trade, and it can still go the way I want. So I'm going to put it just a little bit higher. And then our goal is to try to make it all the way to this bottom CPI line. And I'll show you what I mean is this. So what we're thinking is like price can do something like this. And then price is either going to come and retrace back up, or it's going to break down hard from this point. This is how markets say if CPI is expensive or cheap. So let's let this, remember we're on a 5-minute time frame. Let's let some of these candles play out now. Trade was activated, and now that is a winning trade. Our goal is to get here. Let's see if we get to it. There's another candle, and there we go. I will say that that has gotten to our level. So what I'm not going to do is I'm not going to take a long position and try to ride this back up, because I only want to take a position off of a close above or below the 50% mark, because we closed right here below the 50% mark of the CPI candle. And so now I'm just going to have to wait, because I'm already in my long position. If we keep going down further and further, then I'm just going to keep collecting profit. And so now, as we let the next candles play out, now we're pushing back up. I'm not going to open a short. If you're a fair value gap trader, we just came up and cleared that fair value gap. And now we're approaching the 50% line. So in my brain, I'm thinking, okay, we're now either going to get a retest in reverse, and then I'll have another opportunity to open a short, or we're going to start closing above. And as soon as we close above, I'm going to look to go long and ride it up to this point up here. We've now tested it, and now we've rejected. So this could be an opportunity for you to open a short. Notice that we just cleared a fair value gap right down here as well. And then now you can set your stop to be very close. And just note that this is not the first time this has happened, so there's a high probability that you could get stopped out, but we're going to use a very small stop. And let's see what happens, because not every trade is a winning trade. Don't let someone fool you that every trade is a winning trade. And now, as we can see, this was another winning trade, very small, but still a winning trade nonetheless. And now we're pushing back up, still reversing. These are 5-minute candles. And now we're retesting. See how important that 50% line is? How New York continues to keep testing it. Breaks down again, another retest, another retest, another retest on a 5-minute. And then now the break. So now this candle has closed above. So what I'm going to do now that this is closed above is I'm going to set my long position right here. I'll probably set my stop either below this low or one of these candle lows right here. Okay. And then now my goal is that price, because it is closed above the 50% mark, is that we're going to look to ride this all the way up to right here. Just like we rode the first one down to the entrance is right here, and we rode the first one down to the low side of CPI. And the trick is, like we were saying before, is we're trying to catch part of the move up to the CPI high, just like we caught the part of the move to the CPI low. And then the goal is when it tests the CPI high, if the markets say that CPI is cheap, that's when we get the break. And you're already in the break from the 50% mark with a very small stop loss, opposed to entering in right at the break line and then having your stop loss have to be way down here to the 50% mark, or even worse, down to the CPI low. So we now are entering along. We've got that 5-minute close. Let's see what happens. Already a winning trade. And as we let more candles come up, that's the New York break. As in, New York has finally decided that the CPI is way too cheap. So now this is a winning trade, a very big winning trade. And now I'm going to move my stop to break even. And then now let's see what happens when we just let an immense amount of candles play out. And I'm not even going to go all the way. This goes all the way up to 24K. But just to point that how that first entrance allows us. And the other thing to think about too, folks, that people get confused in trading is this didn't happen all in one day. Okay, this is literally 3 or 4 days later. So you always have a little bit of time. We're just trying to do our best to catch the move before it happens versus having to wait till the weekend to catch the move. Now here's the stock market futures. This is the ES and this is the CPI release. So just like Bitcoin, doing the same type of concept, we're marking the high and low and then the 50% mark on a 30-minute time frame, and we're going to let the next candle play out as well. The very next candle is going to be New York. So what do? We're going to switch to a 5-minute time frame. And now on a 5-minute time frame, wherever the candle closes above or below the 50% mark when New York opens is where we want to aggressively play to the low or the high of CPI. And you can see right away, New York's very first candle immediately closes below the 50% mark. And now we look to play this down to this level. So we open a short position. You want to set your stop loss to be at that wick high or just slightly above the 50% mark, and you try to play this down to there. And there's your winning trade on the stock market for 22 handles right off the bat, just from that 50% mark. Hopefully that helps you. And now here's the euro versus the dollar for all our Forex fans. We've noted the CPI release right here, the high and low, and now the 50% mark. We're gonna let the next candle play out. And now the very next candle is New York's open, which is going to be this next candle. So what we're going to do, follow the rules, switch to a 5-minute time frame, and let's see where this candle closes according to our 50% mark. And so now this candle has closed still above the 50% mark. You just had to wait 2 more candles, and we've now tested the 50% mark. We've now closed below it. So it's best to wait to test the 50% mark. Let me get the right position on, and we're now going to open a short. Set our stop at the recent wick high. There's no fair value gaps to fill, and now you're going to look to write it down. And there's your winning trade. For our Forex traders, where it might look small to some of you watching, there's a quick 27 pips right there for you. And now going back the other way, we've now closed above the 50% mark. We're going to go long, set our stop at a recent low. The goal to ride up to the top over here. And there you go, folks. Though a little bit of stress from a little bit of underwater, you can see it perfectly back tested the 50% mark, and what has now become, what was a 27 pip win down here is followed now by a 42 pip win after that. I hope our technique has helped you. Good luck tomorrow with CPI. This is the True Algo system, and we hope this was able to help you. Have a great day.